We have to look at the dollar to understand what is the technical situation of many other assets that are priced in dollars. In recent videos, we talked about the differences in the charts of US stocks when translated to different currencies and how much more resilient those corrections appear on the translated charts. The same goes for major crypto assets like Bitcoin and Ethereum, which are both perched at critical support levels but holding them for now, which is in itself a sign of relative strength. One major reason why the rise in the US dollar is so strong is that we are witnessing a short covering rally. For many years, we had this widespread idea that the dollar would lose its reserve currency status and the Fed would keep the money cheap for a long time. And so many countries and the private sector as well borrowed US dollars. Many emerging market countries had their debts issued in dollars, for instance. Those borrowed dollars constitute a huge dollar short position globally. These shorts are now being forced to cover. They have to buy back the dollars to pay their debts back. So those dollar bearish narratives need to be fully discredited by market forces now. This is how markets top and bottom, no matter what market we are talking about. But we won't go into the macro side of things today. Instead, we will read the chart of the dollar index in such a way that we can extract a story. That story will let us know what to expect from here, how long can the current trend last, and how far can it go. Okay, let's go for it. What we see here is a monthly logarithmic chart of an equal weighted dollar index. This is not a tradable futures dollar index where the euro accounts for a big weight and basically it becomes a mirror image or a symmetrical mirror image of the euro. Here instead, I've built an index based on the 7 major currencies against the dollar on a equal basis. Okay, there are many ways to construct dollar indices to extract the different kinds of information. This is a simple way. I'm using TradingView here. If you want the formula for the index, just ping me on the comment section and I can post it there. So very interesting here is that we had the start of this rally here back last year, and in December or January 21, when we bottomed here. We can say that this is the long-term support, this line here. This is the long-term support, and the market bottomed right there. Now, this line wasn't built at this contact point. We had this line already in place here back in December 11, August 12. These two bottoms here, see how they are already slightly sloped to the upside, building that angle. And this angle here is to be found in different circumstances here in this brief chart. We don't have more history than 2006, but we could go back in time with more data, but basically would find the same. We can extract from this historic data here this small ascending flag type of conjunction. It is already framed within the same angle. So based on this bottom here of a higher low, we immediately recognize that that level, extend this line to the future, and then we get this contact point here in the beginning of 2021, and the market from here goes straight to another level, which we knew from the past by just tracing a line here from the tops in summer 2007. And then letting the market show the contact points here later on, and also with this breakout. This the whole area here is basically a range, so we could extend here the lines to a broader range, and we see that also here the market built this continuation patterns within this area that was already here recognized by this top. So here we have basically already the lines that will shape the future of the landscape for the dollar index. Once we get to this line that was known from here, we can do two things. First, we acknowledge that we are at the level of a breakout. We have the monthly close there at the line. When we have a monthly close at the line with no upper wick, in the case of upside breakout, this is already a strong indication that the market will probably hurdle that line, clear that line to the upside. But before that, we have an episode of volatility here, and this episode of volatility we can use also to let the lines intersect, to take acknowledgement of this intersection, and then to find out if this intersection into the future, if this placement in terms of timing serves us to place future lines. Okay, so we had that from this point on, let's say when we realize the market is breaking out and we want to assess how far it can go, we can immediately go and search for an intersection where to base a new line before the market gets there. This is the same that we're doing here with this dashed line here. It is dashed because it's a line that has no contact point, so I try to differentiate the lines that have no contact point. Traditionally, in technical analysis, you need two contact points to establish a line. I use parallel lines. By using parallel lines, you only need one contact point. Okay, that's the advantage. You don't need to wait for the market to confirm the line. By then, maybe the investment decision you want to base upon the line is already lost. The opportunity is already lost. So going back into this intersection, we place this intersection here, upwards here, in terms of in time, and we let the line cross the same angle that we are being using. We let the line cross there, and then we see if the line, if the market reacts to that line. And we see that besides of this red candle here, this doji kind of hesitating month here, we had the market pumping here against this line and reversing slightly. The first significant red candle was at this line. So we can infer from this that the angle is still the right one, is still an angle that we can follow into the future. So what we do from here, we want now a higher target for this whole area where the market is now contained. Okay, so we do the same exercise. We go below here and we recognize a breakout, which is huge green candle here. There was a breakout here, a breakout above this prior tops, and this candle was so strong that it could also clear this intermediate high here, which by the way is not that important. We see that this high here from December, January 2017, it didn't reach that descending line at all. It reached the corresponding descending to this line here, so it's not that strong level, and this was maybe the technical reason why the market cleared this level so easily, went to the next upward sloping line, pierced it, went to touch the nominal high from June 2015, and retraced back then from this line to rest here and close the month on the ascending line. And this is the point where the next candle started. So we have a significant breakout here. If we have a significant breakout here and we have two doji candles, strong breakouts, doji candles are nice placements to place to let our lines go through or originate. In this case, okay, after the fact, we do nothing with this line, we may think, but this is not the case. By placing this line here, we can let it intersect with another line that is already confirmed. Okay, we let it intercross, and then using this intersection here, we can extrapolate the intersection on another line that is already proven. We had a contact point here. We had this polarity, this very interesting polarity change with a support here, breakdown, and then the retest of that line from below, and then this second contact point. So we can infer that this is an important resistance channel resistance line, and so basically we bring that intersection up to this line, and then we let a known angle intersect that line, and so we have a target here, and that target in terms of time corresponds to June, July next year, 2023, and the distance we have from here as we speak is more or less about 12%. We are now, as we speak, we are now about 10% from the line, but 12% from the target in terms of timing. Okay, so these new lines give us also now an idea where we can retrace back to and where we can go in terms of continuation of this major trend here. Okay, we could correct here to this and go straight to the target. Okay, so we can correct back to this support, but we let other support areas intact, because as we see, since the bottom here in January 21, we had no significant pullback to prior support levels. So none of these supports, once it was, or resistance, I have to say, once cleared, converted themselves to support. So we did not see any polarity shift as we usually see during momentums or trend with less strong momentums. Okay, we are seeing very strong momentum here, so the market could retrace back to these some of these levels. We have a nice intersection here from this horizontal top that corresponds to June 2007 and later in 2015, so we could eventually go back to here. We have to clear that descending support to get there, but we could do it. We could also go all the way down to this descending support and test that line once again, but that is, from a micro perspective, becomes a little bit more difficult to erase all that situation that we are witnessing here. So, but we can count on some retracements back to these lines on the way up to those levels. If we reach that level, we could see also the reversal from there happening next year from that. This could be eventually also a way to approach that that target. Now, we need some confirmation for that target, don't we? In those cases, we just repeat the same exercise by dipping down here on the weekly, going down from the monthly to the weekly. We could project and continue doing the exercise by going down until the minute chart, if you want. We'll stick here to the weekly. We don't go to the dailies today to not extend the video, but this is the same exercise you can do with all time frames. We just try to find within this time frame an angle that has been well respected by the price action. So we have this slightly ascending inclination here from that aforementioned bottom and subsequent breakout. We can use that. We can then take that line into the past and see if that angle somehow shows in the historic price series. And you can see indeed we had here an ascending move, for example, and a comeback to this level. We have a reversal of polarity here playing with this angle. So this becomes an important line. We can bold that line to have that line as a confirmed one, as an important one. This line, once intersecting here with this ascending line, again, this intersects exactly on that point in time that we used to establish the line here that corresponds in terms of price action with this whipsaw kind of a price action, and also the very bottom of this sideways congestion. Okay, it is not very recognizably here, but we do have a bottom here. So this intersection proved itself to be quite interesting, and from here we can infer that this line, and therefore this angle, is an important one, is one that the market will respect. So we are right now here, we trade between this huge area that we announced here on the monthly chart. Okay, this huge area here that I'm circling here with a mouse, but we need smaller areas to base our tactical trading on a day-to-day basis. We need to know to define the direction, to filter the direction we want to go while we are within this area. And I would say within this huge area here, I would take only longs. Okay, but you want perhaps to shrink that area to something smaller, and that is why we go into a smaller time frames. Okay, and by using this this very same angle, we let it intersect with other levels on the chart, and we recognize that these new added lines based on a weekly, one of them intersects this dashed line, okay, that is placed here for the future. So this is somehow confirming this target. Okay, in fact, this is a whole range here because we placed that line here on the top of this congestion here. The congestion was mimicked a little bit here, especially the lower border of the congestion with this swing low here, and then this breakdown and the confirmation from below. So for me, the lower line appears to be more significant, and this brings us to this intersection here. So we could eventually take this dashed line and duplicate the line here, and let me just copy the line and let a new line go through this other intersection, okay, to establish a future resistance or target line where to base our future decisions once the price gets there, and also in order to measure the magnitude of how far we can go. So we could extend this rally to July next year, but we could go for another year into summer 24, summer in the northern hemisphere 24, so 2 more years basically of an ascending movement here in the dollar. This channel here could also enable us to basically infer how the market could go upwards. We could get stagnated here within this and establish a plateau within this this smaller area here close to the upper blue resistance, ascending resistance. We could do that, but we can also leave that area and go to find some sort of support on lower levels, like we said. But basically, any dip within this area is a buying opportunity in the long run, and I would use this area here only for longs. From here, we can look for interim lines and establish here other supports where we could eventually see a reversal into. We could see a reversal to this level. Continuation could see a, let's say, or a breakout here, and continuation north sides. So look at inferred different scenarios. It's very difficult to see exactly what is the path the dollar will choose, but that is not the point here. We don't want to have make out of this chart work any crystal ball type of clairvoyance. We just want to infer what type of movements the market can do from here, establish the zones so that within those zones you can apply the tactics that you most use, be it breakouts, reversals to the mean, and so on, momentum, continuation patterns, and so on and so on. Okay, you just filter them with the channel landscape. Okay, so basically these are the areas where we can go. And if we look at the dollar against other subgroups of currencies, for instance, against emerging market currencies, we see a very similar path. We see clear breakdowns here, accelerations, and also here there is still a room to reach significant targets. So this is inferring here that this trend could go on. And if you look at the dollar against also on a equal weighted basis, against Asian currencies, also there we see massive outflows from Asia into the US that started here strongly at the beginning of this year, peaked here in January, same as in the dollar index we saw, and the breakdown more or less also here in June, and then accelerating. We're just accelerating with each month, building a larger candles, and also here the bottoms or the supports that are possible from here are still a little bit far away. So this implies some continuation. Okay. So in terms of macro, just to put things a little bit in perspective, because the percentages that we are talking about here are obviously percentages that we are used to in the FX market, and nothing to do with percentages that we may see in the crypto sphere, for instance. But these are huge percentages. We are talking about a surge in the dollar from those bottoms of about 40%, and it could go up another 10% or so to 50% higher from those bottoms. This is in a very short amount of time. And the upper targets belonging to this upper channel lines here, they could go up into the 100%. This is for those countries that borrowed in dollars, that have their debts issued in dollars, countries that have to buy energy in dollar terms. We are speaking here already of the 40-50% increase in their spending, and potentially a doubling of the increase. This will break the backbone of many economies, as we are already witnessing worldwide with chaos emerging, and this will only lead to civil unrests and stuff that we are listening in the news. So just to put things in perspective, that a 40% movement here in appreciation here in the dollar, this is for the world currency per se. This is a huge increase that will not benefit initially the periphery of the system, and finally it will also lead to very big problems domestically in the North American economy. But we are still not there. What I see here is that we are accelerating so strongly because this is most probably due to short covering and not a full-fledged trend, as it may look like from a technical perspective. Okay, I don't see this as a full-fledged trend, also because we don't have pullbacks during this ascending movement. So this has all the appearance of a short covering, okay? Because in immature trends, you do have those pullbacks, the new buyers coming in. This is not at all about fresh buying. This is about shorts covering, okay? So this means that at some point, global investors that are not yet into the dollar will recognize the trend, and they will try to get in at lower prices. Then we will see pullbacks, and then we will enter a more mature stage of the trend. So the trend can really last for long, seen from this mixed macro and technical perspective. Okay, fine. So we can conclude from the charts that capital inflows to the USD are very strong in terms of momentum, and we haven't reached the first layer of targets yet based on longer term channel work and the supports we have seen here on the charts. This trend could last for several months at least, well entered into next year. Targets on monthly charts are pointing to July 23 at least. We can also conclude that right now there is no sign of potential reversal, although retracements are to be accounted for and could be violent. We can infer this from the speed, the momentum the market has exhibited since the summer of 21, the gaps it is leaving behind in the price structure, and the fact that we don't see any pullback during this ascending rally. Okay. A pause in the trend will emerge when other assets start competing against the dollar, namely US stocks, some commodities, and cryptocurrencies. We can see this already by looking at those markets priced in global terms, that is, by indexing them in a basket of currencies. Their revival will surely take some wind off the dollar sales, but this is material for another episode. Stay tuned to future videos, subscribe to the channel if you don't want to lose more episodes, and click the like button so the YouTube algos can show this video to more people. Bye for now, and thanks for watching.